Hi, good afternoon, everybody, and welcome back to Series 8 of the Climate Pioneers Show and to our final episode of the season. This series, so far, we have been interviewing experts from some of the UK's leading climate investors, getting their reflections on the market in 2024 and their predictions for what they think the market will do in 2025. We've been asking them about the technologies that they're excited in investing into and, crucially, the advice that they would give to founders looking to raise this year. And today, seeing us out for Series 8, I am joined by JP, co-founder and CEO of Elbow Beach Capital. Elbow Beach is an early-stage climate tech VC. They help to unlock technologies, solve big problems, and transform industries. And to date, they have made 20 investments. JP co-founded Elbow Beach in 2021 and is CEO. With over 20 years of experience in large telecoms and tech companies, he brings deep operational experience to commercialise technology. He transitioned into climate tech investing, combining his passion for commercial success with purpose-led business. And throughout his career, JP's led numerous turnaround stories by focusing on customer and colleague outcomes, driving business success and impact. So JP, thank you so much for joining me.
Thank you very much, Sherry, and thank you for having me.
My pleasure, my pleasure. I gave a little bit of an intro there to Elbow Beach, but are you happy to just go into a little bit more detail about the fund and tell us more about your investment thesis and, a little bit more about the business?
Yeah, absolutely. Thank you. So everything you said is absolutely bang on. I think where we really focus at Elbow Beach is customer outcomes. So it's sort of my background over the 20 years previous to becoming a climate tech VC. And what we look at is where does impact marry up with commercial success? And where do you create that real customer value? Where does the technology create that real customer value and therefore get adopted? Because climate technology, I think, has been through a number of different iterations. We all talk about clean tech 1.0, which is sort of the precursor to where we are with climate tech now. And I think a lot of our feeling is that that was not as successful as it could be, not because the technology wasn't amazing, not because the people and the founders that worked on those technologies weren't brilliant founders, but there wasn't that link between the customer's outcome, what was the customer going to achieve by adopting this technology, and how brilliant the technology was. The technology by itself was going to decarbonize, but didn't create enough value for customers that they adopted it. So therefore, it was never going to get to scale. And we think about it in a quite straightforward linear fashion, that if you create enough customer value, that will drive your technology, that will drive customer adoption, which will drive scale, which therefore will get you the investor returns, which are incredibly important. But even more important is the impact returns. So that decarbonization of industries. And I think that's where that's our raison d'etre. That's what we talk about in our ICs. That's what we talk about as a team all of the time is this technology going to be attractive enough to customers to be adopted? And I suppose the thing to say is we feel really, really lucky being based in the UK. The UK is a world leader in climate technology. There is only the US has more climate tech startups, but actually the UK has twice as many per capita climate tech startups as the EU and the US. So there is such a density of capability and an ecosystem in the UK, which we love being part of. The founders and the people that work in this ecosystem are the world's very, 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 very best at what they do. So Elbow Beach is really focused on supporting these businesses and focused on the best of British, which is really, really exciting. And then the final thing I would touch on is that climate tech is the answer. A lot of people talk about policy changes, a lot about different regulatory ways of dealing with climate change. As we saw from the Climate Change Commission report, 5-year report that was released last week, the transition to net zero by 2050 is now 75% cheaper forecast to be for the UK compared to where it was in 2020. And the reason for that change is very simply the adoption of technology. So the idea that climate change will be dealt with by different policies and regulations and legislations just isn't going to be the answer. It is going to be through the adoption of better, newer technologies that is definitely greener, but also is faster, it's cheaper, and it's better than the incumbent technologies as well. So that's a little bit about us and how we think about things.
Amazing. Yeah, absolutely right. I mean, regulation and policy help. They help to drive adoption of some of those technologies, but you're right. If the technologies themselves don't ultimately drive better business outcomes, they're not going to be adopted at scale. So yeah, absolutely right.
Absolutely.
And in terms of stage that you invest at, and ticket size, and so you've already said UK based, best of British companies, both hardware and software, or deep tech only?
Both hardware and software. Typically, we like to see the two marrying together with a really intelligent and well thought out business model. But those things don't, we invest at very, very early stage, so pre-seed and seed. So those things are often embryonic at that stage and they're not fully formed. But we like to see a consideration of the business model and the sort of customers going for. Ticket size, anything from $500,000 to 2 million is where we like to start the ticket. And then we have solid strategies for reserving capital to back follow on rounds and our companies into Series A and beyond if necessary.
Fab. Excellent. And how did you find 2024 to be, both in terms of that kind of macro big picture of how, what you perceived within the world of climate investment, and kind of on a more, localized level for you, how was last year as a fund?
Yeah. So I think 2024 was incredibly tough across all capital investing strategies. I think both from VCs trying to raise funds to deploy, and also for startups trying to raise from VCs. And yeah, I think that people can pull the stats out, but a huge decline year on year. And actually, the back end of 23 was far slower than 22 as well. So it has been a decline over a few years. However, climate change, particularly in the UK, is probably bucking that trend somewhat. I think you can see it in the stats, and we also, the way I feel is there is still money in investing in climate change in the UK, in climate change technologies in the UK. I think it's probably therefore resulted in some businesses which are great but not maybe ready, not getting backed, and that's really tough for founders. And I have a huge amount of empathy for people that have been trying to get to market over the last 18 months. But those that have well-defined business models, well-defined commercial traction and customer value propositions with their ideal customer profile, I think we're still raising well. There's probably some price opportunity, if I were being really honest from a VC perspective, some price opportunity because there wasn't as much capital in the market and a lot of opportunity. But tough across. So I think I think the audience here I expect is mostly climate investors and climate founders. So I think they're probably in a better space than a lot of others outside of the obvious AI space. They're probably in better than most, but not at the very best, but broadly in a tough space. But the best are still raising. So hang on in there and continue to work on your proposition. For our portfolio, I think there are some highlights, particularly the two that went to market for large rounds last year. So Anaphyte and Waze in our portfolio, both Bristol-based, raised significant sums of money against a tough backdrop. So well done to those management teams. If I were looking for a commonality of why both of them rose, I think I was actually told this by one of the incoming investors in one of those businesses, is there's a lot out there. We liked this business because it had greater market traction, because it had signed contracts with customers. And that was the differentiator for this later stage Series A investor coming and saying, we like this because it's well engaged with the market and it's showing traction already. And I think that was good to hear, because it's what we at Elbow Beach talk a lot about and think a lot about. I think then the other thing which I would say is a massive success and may prove to be more difficult or not as plain sailing this year is international growth. A number of our portfolio expanded into the EU, into Portugal, signed contracts in Australia and also in North America as well. So, and those businesses are really primed well for the fundraising desk kicking off this year, which we know that market traction, particularly internationally, is very, very relevant, because the UK has this wealth of really early stage businesses, which is phenomenal, but we do only represent about 3% of global GDP. So all businesses have to have an export strategy, have to be thinking about how do they get into those other markets, how do they win customers? What are the considerations there? What help do they need? What teams do they need to recruit to build with that international export experience? Because other markets do behave differently. But that would be the second thing I would say is a huge positive for 2024 is those parts of our portfolio that broke into other markets.
And would you say that's quite an important factor when businesses are looking to raise Series A, that if they can demonstrate some commercial traction in international markets, that's a real differentiator for them?
Yeah, 100%. 100%. I think it's a great question. I think there are some that are as bullish to say that every day you're thinking about not exporting, you're wasting your time. Just because the UK is phenomenal as an incubator, but as I said, it's only 3% of global GDP. So do you want to be fishing in 3% of the market, or do you want to be fishing in much, much bigger markets? So yeah, I think great question. I think you're absolutely right. It is a big differentiator. You can show international opportunity at that stage.
And what's the challenge there with the founding team being spread too thin, or perhaps their marketing strategy being too, I hesitate to say scattergun because it doesn't necessarily have to be, but I suppose the risk might be a division of focus and therefore not making enough forward motion in either market?
Yeah, I think that comes back to a broader challenge of just prioritization. I think it's absolutely got to be ruthless. And it is tough because the definition of strategic prioritization isn't saying what you're going to do. It really is saying what you're not going to do. It's about saying, this is an opportunity, could be worth a fortune. I'm not going to do it because I don't have the bandwidth, the capacity, the resources to go after it. I think that's a really tough thing to do. I do see a lot of founders and a lot of VCs as well, because we don't want to close the door on lucrative opportunities as well, going, oh yeah, we need to stop doing. We'll keep looking in there. We'll keep playing in there. We'll keep having a go in there. But it's that ruthless prioritization of being brilliant at one thing, and then how do you focus that? I think the best way is to use well-trodden models and thinking about it. So where are you going to play in the value chain or in the supply chain? What is the value you're going to create for your customers? Who are your customers? Who are the ideal customers you want to talk to? And then the final part of that is how are you going to get access to that? I suppose that's part of what the question you're asking, Cherry, is what is the segment plan? Are you going to partner? And that can be a great way of unlocking internationally. And I think a number of our portfolio have leapfrogged well ahead of my expectations through unlocking phenomenal partnerships. It doesn't happen by accident. It has a lot of work, a lot of air miles are booked in trying to unlock those partnerships. But getting those partnerships unlocked is key. And I think thinking more creatively around, do I have to grow my team? Probably don't have the capital or the capacity to do that. So can I do it through really smart international partnerships? I think it's really good. But yeah, so it's a difficult thing to do.
Absolutely. And like you said, having somebody in the team or hiring somebody into the team that's experienced in doing that, in that international experience, expansion piece, and can bring advice around things like those partnership strategies, I suppose, to help people do it. Awesome. And how are you seeing the market to be for 2025 and looking forward? Are you optimistic about the market this year, big picture? And also, how are you feeling about the future for Elbow Beach? What's 2025 shaping up like for you?
So I'm incredibly bullish. I am about climate tech investing. And I would say anyone that's listening to this who has found it tough in 2025, I really believe that, 2024, I really believe 2025 is going to be a huge opportunity. We're very, very bullish at Elbow Beach, but I'll come on to that in a second. I think there is now creating a much broader understanding, and maybe it's because the last couple of years have been so tough, much broader understanding that climate tech isn't just about decarbonisation. And that is becoming part of the broader awareness of this family of technologies, which is across different sectors, across different technology families, which can absolutely have much better customer outcomes. I think industry is far more open to this when our portfolio companies present themselves as different efficiency plays, lower cost plays, opening up opportunities to their customers. That is now gaining much, much more traction rather than a more altruistic, this is a green technology, therefore you should adopt it, which, I wouldn't be doing this if I thought that's how the only way we were being successful. I'm here because I believe there is a better financial and commercial outcome for the end customer in the technologies that we back. And I think that's becoming the accepted position now. There's And more of the opportunities that come across our desks are talking in that language. They're saying, we are green, but that's not why you should be interested in us. And that's why I'm so bullish about 2025, because founders have got that. They're beyond that. That old way of going, you've got to do this because it's green, you've got to back this because it's green, I think is in the rearview mirror. It's now so much about, this is an amazing technology, can transform your business, can unlock 20-30% cost savings in your business, which is transformational to the bottom line. And those are the things that I see as becoming more and more familiar, more and more common, and why I'm bullish in 2025. Because you do those things, you'll see pots of capital coming in from other markets and not badged as clean tech, green tech. They'll be much more focused on, is it AI? Is it a semiconductor play? Is it broader electrification? Is it about novel material that's at 20% the cost of the incumbent material? Those sorts of things, which is why I'm really, really bullish. And then for Elbow Beach specifically, we'll make significantly more investments this year than we did last year. We're well primed. We've got a great pipeline of businesses that we're just getting to just going to the transaction stage with, which is super exciting. Lots of late nights and lots of paperwork, but that's part of the job, and one of the best parts of the job. So we've got a late stage pipeline which is looking good, which we'll start to transact on shortly. And then we're seeing some great opportunities coming into the top of our funnel, which the team and I are really, really excited about. So 2025 will be super, super exciting, and we'll be really, really busy. So yeah, I'm definitely bullish about it.
Awesome. Fantastic. And I agree with your point that, climate tech as a label in and of itself, hopefully will need to dissolve slightly somewhat. And I feel like people say about AI, right? They say AI is going to, in the next couple of years, stop being a differentiator in and of itself, because just any new technology that's built will have AI at the core of it. And I feel like sustainability and climate should be the same. Anything new that's built should be built to reduce cost, to reduce efficiency, to be more sustainable. So you almost won't need to mention it because it'll just be a byproduct, right? Hopefully.
Yeah, absolutely. I think that's right. And our job as investors and founders and scientists and academics and engineers is to unlock those amazing technologies that do both. Now, the old world and the hydrocarbon basis for a lot of our economy did amazing things with this product that was great, apart from it destroyed the planet. Right now, it's these amazing scientists. So it's one of the big privileges of my job is getting to spend time with them, who, I have to hold on tightly to understand 10% of what they say sometimes. They're the ones who are absolutely transforming us, and they're taking something, they're doing better than something that has been the incumbent for 200 years and doing it in a clean way. And I think I see it all the time, and that's what gives me such great confidence about climate tech investing, and climate tech in the UK particularly is such an exciting space.
And with climate being such a broad umbrella, and as you already alluded to there, some of the different subsectors within it, are there particular parts of the market, particular types of technologies that you think are really ripe for growth and opportunity this year?
Yes, I think so. I think you mentioned AI, Cherry. I think building on that unlocks a lot of other things. So I think there's two which I'd point to, which we're seeing increased interest in. So the first one is novel materials. So novel materials, I mean the replacement of existing material with something is typically cheaper, decarbonized, but also can be produced more efficiently. So there's not so much supply chain risk. So you're not moving it around the world. You're not sort of manufacturing it in Taiwan and then moving it somewhere else to refine it and somewhere else to then use it. Actually, you're more manufacturing it where it's needed, which is really good because it removes a lot of that supply chain risk in this geopolitical world we live in at the moment. That might become a bigger concern as we move forward. So I think so AI applied then can help in a lot of the early stage research of working out what happens, what works, what doesn't work. So I think AI there. And then the other one is AI and robotics. So the low-cost AI can therefore make the robotic solution far more cost-effective versus an incumbent human solution for it. So I think we have invested in, and we will continue to invest in robotic solutions for difficult roles for humans to do. So that can be applied across lots of different areas, from manufacturing, construction, agriculture. We think there's huge amounts of opportunity there, which can decarbonize because they're more efficient, but also that they'll give market benefit for the economics of the end customer as well. So those are the two, but both probably unlocked by the steps forward in AI over the last couple of years.
Yeah, awesome. Perfect. And what's really important to you when making investments? You talked already about this piece around customer outcomes and being able to show that there's a kind of clear commercial play to the business model. But what else is really important to you? What makes an investable prospect when you're diligencing a new company?
Okay, so great questions. I think you've got to start it with the founders. You've got to start it with the team. There's got to be something there, and the team, as you'll know, Cherry, will evolve and grow. That's the whole part of this, is growing the team and evolving the team. But you've got to have some body or some people there who are utterly brilliant, and you've got to help them get to the next stage. So you've got to start that. And it'd be stupid for me to say anything or start with anything else. Then I really look for someone that is starting the journey, and it doesn't have to be the raison d'etre. I've spent 20 years in customer facing roles, always living and breathe the customer outcomes. I don't think that's not naturally going to be the case for an academic, a scientist, an engineer, but someone that is in that journey of starting to think like that, becoming customer obsessed, looking for the best possible customer outcomes. And it doesn't, we invest very, very early on, but what gets the team very excited on our pitch days and those reviews is a founder that's gone, I don't know all the answers because I'm not there in the journey yet. But the thing that I'm thinking about all the time is, for every hour I spend developing this product, is it improving it for a customer to use? Not does it just make it slightly better and prettier and answer the engineering question, but is it creating value for the customer that's going to use it? And that really gets us excited in Elbow Beach. That really is a differentiator in the pitch. It's someone that really says, and this is what it's going to do for the customer, and this is what I'm going to do next to develop it because it can make it even better for the end customer.
Right. So those founding, they're relentlessly customer focused, user focused in everything they do. Yeah. And how fully formed, obviously, like you said, you're investing really early stage, right? So pre-seed. And as you said, the team is absolutely not going to be fully formed by that point. What are the bare minimum, that you would expect in that team at that stage? And how much because obviously there are going to be gaps. How much do you feel those gaps can be plugged efficiently by either fractional support or by an advisory board? Or what's your thought about how mature the team needs to be?
Okay. So you need the person that's the expert. So we invest in technology. So it's science, it's engineering. So you need to have that person that is the world's very best. They're in the top 0.1% of the world in that field. They know it better than anybody else. What they're bringing to us is they are the experts in. So that's a prerequisite. That's the foundation. It is a really good question about how do you then augment that team. So I think we tend to think about it. We have these conversations in a very open fashion, very early on. It says, to the founders, where is your ambition? Do you want to develop into the CEO? And we've got some phenomenal examples in our portfolio of people that have never led businesses, never led individuals, never done sales, marketing, business administration, all the other parts. And they've developed over the time we've been working with them. And they are phenomenally well-rounded, still on a journey, but are phenomenally well-rounded CEOs. But we've got others who have gone, no, I want to do this. This is where I see myself in our business. And I want to be doing this part of our business. And this is the bit that I'm going to do better than anybody else. And I want your help in bringing in a professional CEO, someone that's got some experience in that space of scaling or in commercializing or whatever the gap might be to do it. So I think having those conversations early on and being open and honest about it, because if it is a development question, that is great. That's really, really exciting to work with people that want to grow, develop, and try new things. But you need to think of that as a journey, and you need to take those steps on that journey. And if it's more of the augmentation of the team and bringing successes to the CEO in the leadership role, then again, start it early and start thinking about it. So you mentioned fractional. I think that's tough. I think there's pros and cons there. And advisory boards, I think there are pros and cons there. But at the end of it, the more people you can speak to, the more people's opinion you can get. I think the more understanding that the founding team can have around what it needs to look like as a team to deliver what they have the ambition of delivering. Yeah, you can imagine we get a lot of J curves in terms of financial performance when we get pitches. What does that company look like that's delivering over here? What does it think about? Well, who's the team that's going to be doing that? And how do you start thinking about building that team and filling those gaps in early on? And I think fractional will necessarily be a part of that journey, but you need people in the team full time when you're getting to motoring. If you're building a big business, your CFO is going to be full time. Your HR director is going to be well, they're all going to be working 60 hours a week if you get to the outcomes of some of these companies are hoping for. So yeah, I think fractional is a step in the journey, but it's don't just do it for the affordability question. Do it because you're getting some really good talent in to help you in that area.
Yeah,
where I would suggest.
Yeah, fair enough. And on that commercial piece, of building out the commercial function, because in these very, very earliest stages, there isn't going to be a full commercial team. And there's this slight tension I see at the moment between, on the one hand, investors wanting startups to be able to evidence really solid commercial traction. That is more required than ever at the moment.
Yeah.
Yet on the other hand, often saying we don't want to see you building out a commercial team too quickly, and actually the sales should be largely founder-led for a proportion of time. But that there's a tension between those two things, right? What are your thoughts on how startups can manage that tension? When should they bring in a commercial team, and how long should founder-led sales be prioritized for?
Yeah, I think probably it's the founder-led sales question is probably what drives the development versus succession, because the CEO, any CEO needs to be selling, right? They need to be selling all day. They need to be selling to investors. And I'm talking about startup businesses. I'm talking about FTSE 100 businesses. The CEO is selling to their investors, i.e. their shareholders. They're selling to their customers. They're selling to their staff all the time. So the CEO needs to be able to sell to all those stakeholders. What we're talking about right now is early stage customers, to adopt a new technology. Now, that is rock hard, right? I've tried it and been successful sometimes, but I've tried it and I've been very unsuccessful sometimes. So it is rock hard, but it's got to come from the CEO, or they need to augment very, very quickly, because that loss of time and not getting to commercial traction is going to be a challenge, because that's what your fundraising will be built on. It will be built on the fact you've got, and it doesn't need to be fully signed contracts. It doesn't need to be revenue lines necessarily, but it does need to show proper interest where a customer or a potential customer is putting skin in the game, putting their time, their resources, and ideally some money into the business to develop that. And that's got to be led by the founder, or they've got to augment really, really quickly. So the founder needs to be honest with themselves, saying, are they up for delivering it? And if they can't, they need to augment the team really, really quickly in that space. But ideally that, sorry, Jay, ideally that first few bits of traction should be coming from the founder. That's really important.
Yeah. And like you said, that self-awareness piece seems absolutely key, because in defining, right, what do I want my role to be? If you want it to be CEO, you need to accept that that's therefore going to come with a commercial, responsibility that you need to be prepared and well suited to take on, I guess.
Yeah, absolutely. Yeah, definitely.
So have you got any kind of key bits of advice here? If I've got aspiring founders that are listening, that are looking to raise this year and feel like Elbow Beach could be a good port of call for them, what advice would you give to founders that might be looking to approach you this year?
Yeah, thanks. I think we've touched on quite a lot already, but if I try and summarize, I think I'll say something I don't think VCs say enough is think about the investment case. I have raised money from other people to deploy into climate technologies to hopefully return more, so I can repay it with them many times over. So help me understand how your business is going to do that. How does that fit as part of my plan to do that? So considering the investment case for me, now I don't expect it to be perfect by any stretch of the imagination, but to be able to say, this is what it could mean for you, Elbow Beach, if you come in at this stage and these things happen, and this is what it might look like for you. And we can debate the ups and downs and bits along that, but at least showing that you've taken an appreciation and shown it's selling, right? You've shown empathy for the person sitting across the table from you and their challenges and what they're trying to achieve. So definitely offering that up. It doesn't need to be bulletproof. It's but it's about showing that you've had that interest, and then showing that that will only happen is if you get customer traction. If you sell a lot to a lot of customers in the normal way these business models will work. So Show that you're thinking about that, and show that you understand that will only happen if you are creating value for that business. It can't just be about this is the greener alternative. There needs to be something better than that. I think we talk about the green premium, and actually, is there a green premium anymore? Well, I don't think there can be a green premium. Actually, there needs to be the opposite. There needs to be, because there is always a cost of change and a friction of change. There needs to be a pot of gold at the end of the rainbow for doing this. It can't just be green. And then the two other things is be really clear about the traction you've got. Just get out of there upfront saying, this is the great stuff we're having. It's not fully formed. It's not £1 million contract, £10 million contract, but these are the conversations and this is what it might look like. And I know I'm on the journey. Get that out there. And the other thing I would say is start early. I think one of the big things is these fundraising rounds are taking a lot longer than when we started investing in 2022. They are taking significantly longer. So just start early. Don't wait until you're 6 months out from the end of your runway. Start as soon as you possibly can. As soon as you've got some decent milestones, decent growth that you think could be interesting to investors, start having those conversations.
Yeah, brilliant. Because I think it's taking 2 to 3 times as long as it did in 2021, right, to raise a typical round.
Yeah, I think so. Yeah, I think so. Yeah.
Brilliant. And I love that cascading down of, first of all, starting with joining the dots as to how this can help you as a fund get returns, then looking at how are we therefore going to get lots of customers because we deliver these really great outcomes and this is the traction we've already got. And that's a really clear funnel that I think that's really useful that founders can work to as a structure. So yeah, that's really helpful. Thank you. And how can people get in touch with Elbow Beach?
I would love you to get in touch. If you feel like you're too early, don't worry. All we'll do is say, not yet, and please think about these things. So if you want to reach out to me on LinkedIn, please do. Yeah, very happy. I think I'm okay. I'm as good as I can be. But if you're really looking for a conversation about potential investment, definitely go onto our website. There's an entrepreneurs form that you can fill in and get all your details in there. And the team are really good. We have some robust processes. So everybody, if they go through that route, they always get a response. And it's based around how does it work within our portfolio, within our investment strategy, within our thesis. So get in touch with me personally, but also if you are looking to start a conversation around investments, go via our website.
Superb. That's lovely. Well, JP, thank you so much for your time and for your insights. That was a really dense episode packed with lots of really valuable things for founders to take away with them.